What's up, guys? I'm Nobody Special. And last night, Fitch Ratings finally downgraded both Evergrande and Kaisa Holdings to restricted default. So this is no longer speculation. The biggest corporate collapse since Lehman Brothers is officially underway. We're going to get into some of the details of that downgrade and some of the language that Fitch used and talk about what happens next. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And yesterday, I made this video talking about how Evergrande and Kaisa had already defaulted. And in that video, I talked about how it seemed like the ratings agencies were asleep at the wheel because even though these companies hadn't made the overdue payments on their bonds prior to the expiration of the 30-day grace period, that the ratings agencies had maintained their C rating for those bonds, even though they had already defaulted. Well, it looks like somebody over at Fitch was listening, because I woke up this morning and I had messages from melonheads all over the world with links to stories about how Evergrande had finally been downgraded by Fitch, that overnight while I was sleeping, Fitch had been downgraded to restricted default from a rating of C. So, Fitch, nice of you guys to show up to work today. I wonder why that took 2 days, but that's neither here nor there. Now, let's get into the details. Before we do that, folks, I have to ask, could you please hit that big, beautiful like button? It really helps me out, helps me to keep these videos coming your way, and I would be forever in your debt. And now it is that time. We are going to shrink my big, fat melon of a head, and let's get into these articles. Here we go. In Reuters, Evergrande and Kaisa cut by Fitch to default after missed payment deadlines. Now, this headline here is a little bit misleading because they were cut to restricted default. The actual rating of default is one level below that. We'll get into a little bit about what that means in a minute here, but just know that they have been downgraded to restricted default. And some of the key points in this article here: cross defaults are triggered for both companies. And the other thing I want to say here is that decisions on forbearance or a financing plan will take time, all right? These proceedings, now that the lawyers are involved, this is going to slow to a snail's pace. So we're probably not going to have a whole lot of day-to-day updates in the near term. Now, there's still all these other stories going on with the other developers, and we don't know what hedge funds are exposed to this and what the potential fallout in other areas of the market are. So we may get developments in those areas over the next few weeks. But at this point, the pace of things with Evergrande and Kaisa specifically are probably going to slow down, if I had to guess, because the lawyers just take forever to do anything. Anyways, reading from the article here, ratings agency Fitch downgraded property developers China Evergrande Group and Kaisa Group on Thursday, saying that had defaulted on offshore bonds, while a source said Kaisa has started work on restructuring its $12 billion offshore debt. The downgrades to so-called restricted default status come even though Evergrande and Kaisa have not officially announced defaults that could result in drawn-out debt restructuring processes. And I am so just delighted to see that somebody in the world was listening and realized that it doesn't matter if the company has officially announced it or not. If they didn't pay, they have defaulted. And again, I just want to scroll down a little bit here and throw in this beautiful line, which of course has to be included in every article. Evergrande and Kaisa did not immediately respond to Reuters' request for comment on Fitch's decision. And again, I am just shocked. These companies have been so transparent and so forthcoming, no sarcasm, in the past. I'm just shocked that they have not responded to requests for comment. I'm sorry, they have not immediately. I love that they put that qualifier in here. They did not immediately respond to Reuters' request for comment. Surely a delayed response is in the works. Surely. I never delay my responses. And don't call me Shirley. Anyways, just in case you doubt this article, here we go. This is the Fitch website here with the China Evergrande Group rating. And there we go. We'll zoom in a little bit here so you guys can see it. Rating of RD for restricted default. And there is your downgrade on December 9th. Now, I went to the actual note that Fitch released on the downgrade, and there was some interesting things in this note. And here we have Fitch downgrades Evergrande and subsidiaries Hengda and Tianji to restricted default. Fitch Ratings has downgraded to RD or restricted default from C the long-term foreign currency issued default ratings of Chinese homebuilder China Evergrande and its subsidiaries Hengda Real Estate Group and Tianji Holdings Limited. Fitch has affirmed the senior unsecured ratings of Evergrande and Tianji at C with a recovery rating of RR6, as well as the Tianji guaranteed senior unsecured notes issued by Scenery Journey Limited at C with a recovery rating of RR6. Okay, so there's a lot of ratings lingo in there, and especially in that last part. So what you need to understand is it is the offshore bonds or the dollar-denominated bonds that have been downgraded to restricted default. Okay, now the senior unsecured ratings remain at C. Now, what the senior unsecured ratings are, that is basically the debt that is given a priority in the event of a default. So the people that hold these senior unsecured bonds, they'll be first in line to get paid. And so Fitch has reaffirmed the rating of C for that subset of bonds because they're a higher priority for repayment than these offshore dollar bonds that have now defaulted. Right. Now, however, I would throw in here the rider, the recovery rating of RR6. That means that in Fitch's opinion, you can only expect to get somewhere between 0 and 10% of the face value of those bonds recovered. So even though they haven't downgraded this senior unsecured debt to restricted default yet, placing a recovery rating of RR6 on that means this debt is worth, at best, 10 cents on the dollar. All right, so things are not looking good for any holders of Evergrande's debt right now. In this paragraph, they say the downgrade reflects the non-payment of coupons that were due on November 6th, and then the 30-day grace period expired. We've been talking about that. The non-payment is consistent with an RD rating, signifying the uncured expiry of any applicable grace period, cure period, or default forbearance period following a payment default on a material financial obligations. Key drivers for the ratings is non-payment of coupons. There's been no announcement from the company or a trustee regarding the company payments due November 6th for the two Tianji bonds after the grace period lapsed. In addition, the company did not respond to our request for confirmation on the coupon payments. We are therefore assuming they were not paid. And this was really the meat and potatoes of my video that I did yesterday. I couldn't understand why Fitch had not downgraded them yet because the company doesn't get a say in the matter. And it seemed like everybody was sitting around waiting for Evergrande to say something and that nothing was going to happen until Evergrande said something. Well, Evergrande never says anything. They never answer the phone. They never release a comment. So I was really perplexed why it took so long for this downgrade to happen. This should have happened on Monday, in my opinion. But it didn't. It took until Thursday morning for that to happen. But the important thing is that it has happened. They are now in restricted default rating. Failure to make coupon payments within the grace period is consistent with Fitch's definition of an RD rating, as the company has experienced an uncured payment default on a material financial obligation, but has not yet entered into bankruptcy filings, administration, receivership, liquidation, or other formal winding up procedures, and has not otherwise ceased operating. All right, so this is the difference between the RD rating and the actual D rating. All right, Evergrande is still operating, at least in some capacity. God knows what they're doing over there, but they are still operating. Okay, so the company still exists. They haven't disappeared yet. They have an RD rating because they have defaulted. They have officially defaulted on their payment, but they have not started any kind of court or bankruptcy proceedings. And so they have not been fully downgraded to D or default. So that's the difference between the RD and the D. Now, this is another important note here. The cross default notes. Tianji is a restricted subsidiary of Evergrande, and the non-payment has triggered an event of default on Evergrande's bonds. As a result, Tianji and Evergrande's other U.S. dollar notes will become due immediately and payable if, if the bond trustee or holders of at least 25% in aggregate principal amount of the offshore notes declare so. All right, so 1/4 of all of these offshore bond holders. And when I say 1/4, I mean in terms of face value. So one guy who holds 25% of all the bonds could do this himself, or two people who combined own 25% of the bonds could do it. But at least 25% of the face value of all of these bonds, these offshore bonds, need to evoke this cross-default provision in order for all of those bonds to be payable immediately. And again, I cannot imagine any scenario where those bondholders would not do that, because at this point there is no point in waiting. The longer you wait to evoke these provisions, the less likely you are to get anything in bankruptcy court. So I would expect we see some kind of an update relatively soon in the next few days where at least 25% of these bondholders have evoked these cross default provisions and demanded repayment. Now, they also mention here that Evergrande announced on December 6th the formation of this risk management committee, which is basically representatives from Evergrande, their lawyers, but also representatives from these state-owned enterprises, i.e. Chinese Communist Party members, who are going to manage the unwinding of this company. So we'll see what comes out of that. But Fitch notes here that there is limited information available on the company's restructuring plan at this stage because they don't really have one. They just assembled this team. Now, I want to read a couple of the assumptions that they're making here in this. The recovery analysis assumes that Evergrande would be liquidated in a bankruptcy because it's an asset trading company. We assume both Hengda and Evergrande would go into bankruptcy if Evergrande defaults. And it goes on to assign some percentage values that it thinks will be recovered in the event of liquidation. 60% for net inventory, 70% for trade receivables, 60% applied to property, 10% applied to investment properties, 100% for cash. It also mentions that they are excluding investments in joint ventures that are worth 88 billion yuan, mainly including stakes in non-property businesses that could be illiquid. They've been trying to sell some of these and they haven't been able to. Now, they also mention a little bit here about Evergrande's supposed pivot to auto businesses or to electric vehicles. Now, I found this interesting. We estimate the residual value of Hengda and Evergrande Auto by assuming they will be liquidated as they are asset trading businesses. Evergrande Auto's electric vehicle business remains loss-making. We expect the residual values of Hengda and Evergrande Auto to both be zero after paying off their own debt. So these car companies are not going to be the saving grace for Evergrande, no matter what these guys go out in the press and say, right? There was some talk about how Evergrande wanted to become an electric vehicle company. That was desperate posturing in the press. And keep in mind, that came out right around the same time as this ridiculous IPO for Rivian and the ridiculous valuations they were getting, right? So it was just a very en vogue thing to say we're going to be an electric vehicle company, right? Evergrande has no electric vehicle company, all right? The electric vehicle company that they have doesn't make any money. It's not going to be worth anything in these default proceedings. All right, so there you have it. Evergrande has officially been lowered to RD, and that Fitch does not have a very high degree of confidence that much of this value is going to be recovered in these liquidation processes. Their senior unsecured debt is still rated at a C, but with that RR6 rating, Fitch is saying if you're lucky, you'll get 10% of your money back. They're saying that these auto businesses are effectively going to be worthless in liquidation and that they're only going to get pennies on the dollar for the assets they carry on their balance sheet, something we've been talking about on this channel for a long time now. Now, the other development was the same thing happened to Kaisa. Kaisa also got downloaded to RD. So we're going to get into that one a little bit too. Here we go. Here is Kaisa's rating on the Fitch website, and they have, sure enough, been lowered to RD effective December 9th, 2021. And here is the note that Fitch released today on this downgrade. Fitch downgrades Kaisa to restricted default after missing payment. Fitch Ratings has downgraded Kaisa Group Holdings Limited long-term foreign currency issuer default rating to RD from C. Fitch affirmed Kaisa's senior unsecured rating and the rating on its outstanding U.S. dollar bonds at C with a recovery rating of RR4. Okay, so again, the same thing as with Evergrande, these senior unsecured debts, all right, which are given a higher priority in bankruptcy proceedings, those maintain their rating of C. Now, they've given them an RR4 recovery rating, which means in Fitch's estimate, you will get somewhere between 25 to 50% of your money back in bankruptcy proceedings. So the bondholders at Kaisa appear to have a little bit better chance of at least getting something back compared to Evergrande, where they're saying if you're lucky to get anything. In Kaisa, you may get up to a quarter to a half of your money back. So slightly better, but still, pitiful performance. And again, you're going to see a lot of this similar stuff here, that they failed to make their payments, that they failed to do it before the end of the 30-day grace period, that they have gone into RD, which means that they have defaulted on a payment, but no formal processes have begun, that the company is still operating. I would add that this paragraph here is important. According to its announcement on the Hong Kong Stock Exchange, Kaisa appointed a financial agent on November 25th of 2021 to engage with holders of U.S. dollar bonds due on December 7th about extending its maturity date, but the company failed to get bondholders representing at least 95% of principal to agree to the extension. And so Kaisa tried to renegotiate their debt. They didn't get anywhere. The non-payment of Kaisa's December 2021 U.S. dollar bond triggered events of default for the company's other U.S. dollar notes, which will become immediately due and payable if the bond trustee or holders of at least 25% in aggregate principal amount of the offshore notes declare so. All right, so we've got the same thing as we had with Evergrande. People representing at least 25% of these bonds need to get together and demand payment in order to trigger these cross-default provisions. And again, there is limited information available on the company's restructuring plan at this stage. Now coming down here, again, we have a lot of these estimates of percentages that'll be recovered. Talking about the liquidation, they're saying they do believe Kaiser will be liquidated. Basically, everything will be sold off and the company will be dissolved. Now, I found some interesting lines in here. 40% haircut, they're saying, for adjusted net inventory as they anticipate potentially lower recovery from inventory, giving higher probability of default. Means all these apartments, all these buildings that they're carrying on their balance sheet that they haven't been able to say, they're lucky to get 40 cents on the dollar for what they say it's worth. That is not a good sign for housing prices in China. All right, if the apartment next door to you is selling for 40% of the value that the owner bought it for, what do you think that does to the value of your apartment next door? All right, remember, comparable sales is a big deal in real estate. So when this stuff starts selling for pennies on the dollar, it is going to drag down the values of everything else. Here we're seeing an 80% haircut to investment properties due to low rental yield of around 1% annualized in the first half of 2021. 30% haircut to accounts receivable, 40% haircut to buildings under net property, plant, and equipment. And they say that it will be further downgraded to a D for default if the issuer enters into bankruptcy filings, administration, receivership, liquidation, or other formal winding up procedures, which at this point is inevitable in my opinion. So long story short, it looks like the day is finally here. Evergrande and Kaisa are officially in default. They've been lowered to restricted default status. And according to Fitch, the people who hold this debt will be lucky if they get pennies on the dollar back on their investments, something we've been talking about here for months. It's finally happening. Now, the big questions that remain: what is the effect on Chinese banks? What hedge funds or wealth managers or U.S. banks, European banks, have exposure to Evergrande? How many credit default swaps have been written against these bonds? Can the organizations that wrote those credit default swaps, can they cover the payments on them now? So now this snowball effect gets rolling. I don't know how fast that's going to take to play out. It could happen very fast. It could happen over the course of several months, but we're not really going to know until this winding up starts just how bad the exposure of all these other financial institutions are. And also keep in mind, this could have effect on other developers. This could drive up the borrowing costs for other developers in China, which are already on the rise. And that big variable is, what does the Chinese central government do? Do they step in and start bailing out these companies? To date, they've said they won't do that, but we'll see if they change their tune once things start getting really painful for people. Guys, I want to thank you for your time. Thank you for watching this video. Don't forget, hit that like button, subscribe to my channel, hit that notification bell. It really helps me out, helps me to keep these videos coming your way, and I'd be forever in your debt. Until next time, live small and dream big.